It needs to produce a repeat of the previous quarter, which was going into the quarter, the same setup actually this time round, which is very muted expectations, and deliver just a stable set of results, saw momentum return to the tech sector. So really we're looking for iPhones this quarter, primarily driven by ASP increases rather than volumes, and that'll be obviously the key metric people are looking for. But that's the primary focus. Is really the expectations are fairly low. And Apple just needs to deliver a solid quarter.
When it comes to the update on the iPhone's expected deliveries, is there anything from the Samsung results that we can take away here that could provide perhaps a warning sign for what we might hear from Apple in the way of, we think of Samsung warning about price competition and also competition in the Chinese market too? There
are two different things at play here. Firstly, for Samsung, they actually mentioned this morning there was resistance to pricing at the high end.
Right.
So that means Apple's future products have to be more, if you like, lower priced models to be available on the iPhone, which I think they will do. The second issue is China, where China's smartphone manufacturers are getting more market share. There's a reason for that, is we're seeing the rise of triple cameras, which Samsung and Apple don't have at the moment and don't have in their portfolios for at least another 12 months. The triple cameras are really popular because they offer really high quality and great in low light. And that's where you're seeing market share shifts in China at the moment.
Do you think there's any taboo associated with buying an iPhone as a result of the trade tensions currently playing out? Do you think there is this push to buy domestic in China going on, or is this sheerly a play on the tech features, the specs of the phones as you described?
I think for the consumers it's about the tech specs. In China it's about the camera more than anything. And I think in the Western markets it's about the functionality of software with hardware, which is why Apple sort of has held its own despite the very high pricing in recent times. I think we're too early to see the impact of tariffs on consumer choices. Where we are seeing it at the moment is in inventory builds through the supply chain, which was a risk we saw in the last quarter for Apple. Their component inventories rose 170% year on year. And that'll be a key focus tonight to see any changes to those components.
And I'm curious whether or not Apple gets any questions on the earnings call about some of their accessories. An interesting article in the FT you may have seen that if in fact the Trump administration moves forward with additional $200 billion in tariffs of Chinese imports, you could see things like the EarPods, like the smartwatch even be vulnerable to those tariffs.
I think that is a real risk. If you look at the next set of tariffs, integrated circuits, which are the core component of technology, are on that list of the next tariffs likely to hit. So we actually had a public hearing in the US last week. We're waiting for the results of that, but certainly accessories, tech accessories, are a significant risk from any import tariffs.
We do know how Tim Cook feels about that in the warnings on additional tariffs. Let's talk a bit more about the services side, which you briefly touched on here. If we get decent growth in services again from Apple, could that be a catalyst for pushing the stock higher?
Absolutely. I think services, which is very high margin for them, is a key growth driver going forward, and for less reliance on the iPhone longer term. The biggest factor in services is actually the gaming revenue, and we've highlighted a few times that Apple is now the third largest gaming company in the world, having $8 billion a year of revenue from gaming, despite producing 0 games.
That's pretty remarkable, and do you expect that to continue?
Absolutely. All the data we have in the gaming vertical is incredibly strong. We even heard that from Sony's numbers this morning, that gaming was a big driver of the upside. And with Logitech as well, who are a peripheral company. Gaming is a massive $160 billion industry over the next 2 years.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.